नया साल नई शुरुआत, but for the Indian retail investor, last couple of years have been all about patience and perseverance. This Diwali, as we look into the future, our simple message on the channel is don't cancel your SIPs. The tip this Murat season, at least from ET now, for investors who are truly committed to the path of wealth creation is that SIP is the best tip, and don't cancel your SIPs. And when markets go down, go and increase your SIPs. It's all about systematic investment planning, which has worked like a charm for Indian mutual funds. At a time when FIs have been selling, they've been redeeming, they've been panicking, Indian retail investors have been patient, consistent, and thank God for them. Indian markets are not feeling the heat of what is happening in the world. But this Diwali, it's Naya Saal Nai Shuruaat, and it gives me great pleasure to bring on board Radhika Gupta, Managing Director and CEO of Edelweiss Mutual Fund, and DP Singh, Deputy Managing Director and Chief of Business with SBI Mutual Fund. Singh Saab, Happy Diwali ji, Happy Diwali. Let's celebrate in the Punjabi style.
Thank you, Nikunj. Happy Diwali to all the viewers. Happy Diwali to Team ET now. बहुत मुबारक हो सबको.
Singh Saab, the tadka is not there in your Happy Diwali message this time.
तड़का तो देखिए है ये जो आपने पहले की बात की. Whatever you said, Nikunj, that is so apt, so apt. Please don't stop your SIPs. And SIP has been a global success story. Whenever we go out, whenever we meet somebody who has come from outside India, the one very curious question they have is what is this SAP story of India? And this SAP story of India is so strong, so good that see, it has helped millions of the investors to create wealth and help them increasing their money value in their accounts. That's so good, so amazing, and so comforting for us that we have been part of the journey.
It's indeed a Naya Saal Nai Shuruaat for you. You're a proud mother now, and congratulations on that. Radhika, while SIP is excellent, it's the path to create long-term wealth. But a lot is changing now. Last 1 year, markets have been flat, which means SIP has not made any money in last 12 to 18 months. B, given the inflationary nature of the economy, fixed deposit rates will always go higher. And the temptation to move into equities was based on the fact that fixed deposits were not giving any returns. That may change now. So we have a proposition of flat to no returns from SIPs in last 12 to 18 months versus fixed deposit rates, which could go exponentially higher in next 12 months.
Hi Nikunj, happy Diwali to you, ET Now team, everyone. Look, I think, while people do make the comparison equity and fixed income ke beech mein, I think they are distinct asset classes and you have to treat them as such. We've always been big believers that asset allocation is a very powerful thing, and debt is finally a protection asset class. Now, if interest rates are higher, I do believe it is a time to lock in good long-term yields in debt, especially for 10 years, 15 years. But as far as equity is concerned, I think, what we will have to, this in that sense will be a challenging environment because, you have had 2020 and 2021 for many new investors where they've made very large returns. And now you may be in a period of flat to low returns for a couple of years. But this is the nature of equity investing. Equity investing is unfortunately not 10, 12% year on year. So this is the time when you will need to have that patience, not stop those SIPs and realize that from a 3-year point of view, I think domestic economy looks very strong, and finally markets will track domestic earnings, but it will take that element of patience for you to hang in there. And we've seen these periods of flat to no returns in equity markets. 2010 to 13 was one, but I think debt and equity continue to be separate asset classes and both are part of the portfolio.
India wants to be Atmanirbhar. Every time I speak to fund managers, they tell me that Indians should not invest in individual stocks. So I wonder that a mutual fund industry is the only industry which does not believe in this Atmanirbhar concept, because Atmanirbharta means buying individual stocks and not giving money to mutual fund managers.
I don't know. So if I don't know if the question was for DPO. I don't think Atmanirbharta means, in my view, buying individual stocks or mutual funds. I think it can be achieved both ways. I think Atmanirbharta, financial Atmanirbharta, if you have to get it, is being financially free, is making your money work harder than you. Because I think all of us as Indians work very, very hard. So it means making your money work harder than living a life where you're working because you want to work, where financial matters are not a stress for you. Now, if you choose to do it in direct equity, is great. If you choose to do it in mutual funds, great. Of course, as a mutual fund industry, we do believe that we offer a fantastic proposition to many investors who don't have the time to do individual stock picking. If you have the time and expertise, by all means, no one is stopping you. But I think we offer a very transparent, regulated, and cost-efficient way to do this. And many people, by the way, don't have time to do stock picking.
Mr. Singh, morning. Let's get in your outlook in terms of what the outlook is for the mutual fund industry. Given the reports that indicate that the cash levels of the mutual fund industry in September, that had largely risen due to rich valuations, economic uncertainty, and even NFOs. By when can we expect, the deployment of the same? Or do you think that cash levels will likely be maintained at these levels in the coming months? Because the average percentage of cash holding in the top 20 mutual funds, we understand, stands at about 5.8%.
So that's see, up to 5% of cash holding is not a big cash holding. That's number one. And number two, as you rightly said, that because of the NFOs, whenever this NFO comes out, the fund managers take 3 to 6 months to pick up the right stocks. And that has to be the way of picking up. But I don't think that people generally are taking big cash calls. 5.8% in my view is not a very, very big cash holding. Had it been double digit, I would have said so. But yes, valuations are definitely rich. It's very difficult to pick up the right stocks at the right valuation. But fund managers are working hard to pick up those stocks. But I am confident the kind of new businesses which have come, the kind of new companies which are coming, the kind of businesses, the business levels which are happening in the country today, and fund managers will have enough number of opportunities to pick up. And I am actually not worried if the narrative of lower to flattish return also, I'm not fully convinced, because if you leave aside only the large cap funds, where there was a challenge, which was flattish, in other funds, and as compared to the fixed income returns, or otherwise, if you benchmark to FD returns, the mid cap, small cap, this larger mid caps, flexi caps, all have given decent returns, if not double digit, very near to double digit returns have come in most of the funds. And that's a good way to be. And the tax efficiency which is there, I think equities are going to be the best asset class for a long period, at least for 2 decades in India.
Radhika, let me try and put you on the spot and ask you, what's your portfolio allocation at the moment? Are you tilting more towards, let's say, the hybrid and balance funds going forward? What are you doing with your own portfolio?
Look, so I think portfolio allocations are very, very personal. I'll tell you what I'm doing, but I'm also going to give you the disclaimer that I'm a very conservative investor. So I've always had about 60-70% of the portfolio in hybrid funds. My preferred category has been balanced advantage. I also think they offer a mix of debt and equity with tax efficiency. So that's why I don't hold debt explicitly. So that's a bulk. I do continue to have long-term SIPs in mid-cap and small-cap funds. And even though international investing has become less popular in the last year, I'm a big believer in some amount of geographical diversification. So I have some long-term SIPs again in international funds. So very simple portfolio. Heavily the core is hybrid funds, supplemented by some alpha and mid and small cap funds and international.
Radhika, Indians are no longer underinvested in equities if I look at the basic affordability and the SIP and the demat accounts. Do you see now for the industry to see incremental growth will be easy, but exponential growth, that phase of where before COVID we had 6 crore demat accounts which have gone to 10 crore demat accounts. The number of SIPs which have expanded in last 3 years, all that has been an incremental growth. Do you think next 2-3 years we could be in for, we may not be in for exponential growth, it could be incremental growth?
That's an interesting question. Look, I still don't believe, Nikunj, and I take the data you said with a lot of respect. I mean, 10 crore demat accounts, a lot of them can be duplicated, etc. But if you look at the number of investors, at least we have as a mutual fund industry, and I compare it to the number of insurance holders or the number of income taxpayers, I still think the delta is very, very large. If you look at, MFAUM as a percentage of GDP, that's probably in high single digits even today if you take out corporate. I think the global average is 30-40%. So I still think penetration levels have a long way to go even to meet the world averages. Now, as far as incremental or exponential growth, I think the reality is the MF industry does see, or capital markets do see that kind of exponential growth in new investors, etc. when you have great market conditions and you have those. But then you have periods where there is incremental growth. And I finally think that it's not a contest of every year doesn't need to be a year of exponential growth. You can have years of just regular growth, and over the long term, because of the because of the beta you get from just India and India economic growth and a little bit more from financial services, I think the MF industry can grow at 15-20%, and that's a very happy outcome for all of us.
Singh Saab, are you there? Can I come to you for the last question? Are you ready for the last question? Radhika is also listening. Are you ready, sir?
Yeah.
Which is your non-SBI favorite fund manager?
Unfortunately, I've never looked at it.
That was a complete yorker, Nikunj.
I didn't hear you, sir. Did you say a name?
Yeah, see, because I have never looked at the fund manager, I look at the funds actually. That's one way of looking at it. I don't look at the fund manager. And second, unfortunately, I've never invested outside SBI mutual fund. Till now, with all my investments in SBI mutual fund only, but I respect all the fund managers. But as I said, fraternity, I will say everybody is working very, very hard to create wealth for the industry. All the credible fund houses are working so hard to pick up the right stocks. So I will not like to name anybody, but with full respect, everybody is working very hard.
Last question for you. You have 30 seconds, a sales pitch for DP Singh, that why he should be investing in Edelweiss mutual funds and he should look outside SBI. 30 seconds, Radhika, your time starts now.
Oh my God, this is hard. Well, we manufacture very good products. We are one of the fastest growing and most innovative products. And I'm sure, you'll be happy as a consumer if you've invested with us.
And the perfect sales pitch, Mr. Singh? Reaction to the sales pitch and then we'll wrap.
My sales pitch will be that we feel that we have the responsibility and accountability to reach out in each and every citizen of the country. And this is the Jan Nivesh moment for India. And we would like to do everything for reaching on more and more number of people. And this 10 crore demat accounts should be 10 crore mutual fund investors. And we will work very hard.
Well, it's been so amazing to report the growth of Indian financial markets over last 2 decades. And every time we look at numbers, those numbers, they look challenging in the short term. But when we look back and analyze the sheer growth, it has been absolutely astonishing. So India as a destination has arrived. SIP as a culture is part of everyone's portfolio planning. The decade belongs to India. And if there is a good time to invest in SIP, well, it was not yesterday. It is not tomorrow, it is today. So, Mr. Singh, Radhika, thank you to both of you. Have a great year ahead. Naya saal, nayi shuruaat, and you're sincerely hoping for everyone, your family, your friends, your employees, that this is a great year.
Thank you, everyone.
Thank you. Happy Diwali.
Let's take a break. Naya saal, nayi shuruaat, but lots lined up on this very special Diwali program.